Welcome to GP Bullhound's Tech Thoughts, a weekly overview of economic developments in international markets. Hello and welcome to GP Bullhound's Tech Thoughts. Today's the 2nd of December and we are here with Inge Heydorn and Jenny Hardy for our weekly market roundup. Today, the team will cover the latest market news, software results, conference takeaways, and comment on ASMI's profit upgrade. Over to them.
Thank you, Maria. It's Inge Heydorn here with Fund Manager at GP Bullhound.
Hi everyone, it's Jenny Hardy, Portfolio Manager at GP Bullhound.
A quick market update. As everybody knows, the focus is still on the macro and the Fed comments coming out this week that they're decreasing the speed of the interest rate hikes, which has been taken positively by the market and especially tech them. But on the tech side, we really have had some interesting things coming out this week, especially on the software side. We have had a number of software companies coming out with results, and some of them moving up, some of them moving down. What's your thought around them, Jenny?
Yeah, I really think that it's the focus really has been on the magnitude of the deceleration from Q3 into Q4. Broadly, I would characterize it as everyone's reported reasonably solid Q3 results. And then what's kind of differentiated them is how cautious they are around the Q4 and 2023 growth. And clearly things are decelerating going into Q4. And that makes sense. If we think about software cycles of kind of 9 to 12 months and we think about where we were 9 to 12 months ago, I think it's fair to assume that things will get worse from here.
Absolutely. And what can we say? Roughly 2-3% down sequentially is really what we've seen in guidance in general. And I think the share prices has more been a reflection on where the consensus and the expectations has been more than any big differences between the companies. With that said, I would also highlight that I think still the larger companies with more return on invested investment thinking in their selling process have done better than smaller niche companies.
I think that's absolutely true, and you're absolutely right to kind of call out this game around consensus and where expectations are, and that really kind of I suppose driving at least the sort of short term reaction on results. But I think if you look at the businesses that we own it in a bit more detail, so Workday, I would say, delivered a very, very solid Q3 results. So it grew its backlog 21%, guided its Q4 backlog to grow 19%. So within that kind of corridor that you spoke about, that sort of 2-3 percentage point deceleration that I think is pretty reasonably solid in the context of the macro environment. Management did clearly speak to kind of elongated deal cycles, but interestingly, they also spoke to benefiting from some of that consolidation of spend that you spoke about. And I think this absolutely kind of sits in one of those kind of industry standard software pieces that is absolutely a kind of strategic solution for businesses.
Yeah, it's very hard to move away from the product and without adding a lot of cost to your company. And this environment, you want to do the opposite. But I also think what is quite interesting is that if we try to draw some conclusions from the acceleration and the demand in the market, I would almost say like it's going to be very, very interesting to see the margin side of it, because we're agreeing all across the board. I think that the top line is going to fall a little bit going into 2023 because of length of cycles and the economy and so on. But if you look at the big guys, like the ones we own, like Workday and Salesforce, both are guiding up margins, which is quite interesting. So they're benefiting on the bottom line, while being hurt a little bit on the top line.
Yeah, exactly. And I think that margin will be really interesting to see. And I think those businesses that are able to sort of slim down the sales costs and still kind of maintain that relatively robust top line, will absolutely be the ones that you want to own, because I think there are many software businesses out there that are so inherently dependent on pumping dollars into that sales force in order to generate those top line sales, where you have to sort of question the sustainability of those businesses. So I think, where you're seeing the kind of positive margin guidance is absolutely kind of where you want to be.
I'm calling out Okta now a little bit unfairly here, but I think that's been one of the cases this year where you have had trouble with the sales force. You have reorganized it and you have changed leadership, and you've been struggling for 2 quarters. And suddenly now in Q3, they were back on track. They although guide lower going forward, and the share price reacted quite positively. But for us, that seems like a company which is very, very dependent on the sales force being at the right place.
Absolutely.
So that was the software side. Going over to the tech conferences of this week and the read-throughs from the tech conferences, and let's start with the semiconductor side and the demand side there. Is there any news coming out really?
I think it's broadly more of the same. So I think, we've spoken a lot about this sort of bifurcation between end demand. We know anything related to PC consumer continues to be weak, but at the same time we have still very, very strong demand coming from particularly autos. And I also think that the conferences are sort of an opportunity for some of the businesses to talk a bit more to the sort of long-term drivers of their businesses. In the quarterly results calls, it's often very, very focused on that particular quarter. Whereas the good thing about some of these conferences is it's a chance for management to talk much more broadly about the sort of long-term drivers of their businesses, which is absolutely where our focus should be as long-term investors. There were a few companies that called out that semiconductors is going to be $1 trillion market by the end of the decade, and a lot of that is driven by some of the areas that we've spoken about, the sort of electrification drivers, I think broadly the sort of tone from the semiconductor companies is still pretty positive. So you had onsemi, they're still talking about being supply constrained in 2023, particularly in the auto space. I would say broadly positive from the semis.
Yeah, but a little bit, as you said, more of the same. And as you heard Marvel last night, also missing on the numbers, and their exposure is towards storage, the PC side, and consumer. So really no surprises coming out from the conferences in that side. And I would say the same thing comes to software and so on. It's strength in financial side, on the financial client side, weakness in retail and so on.
Yeah, and all the software companies are absolutely talking to longer deal cycles, more scrutiny, I think it's exactly what we spoke about. Those software businesses that are able to provide their customers with a genuine kind of cost case for implementing their software will absolutely, still see demand. Some of those solutions that are arguably a bit more niche, I think, will clearly struggle a bit more.
And you guys that have been listening to us for a while, and you can probably remember 2-3 weeks back, we were very surprised about AMAT's and KLA's warnings on the China demand and how they were cutting numbers. And then lately AMAT raised the numbers again and so on. And now we have ASMI doing roughly the same here. What's going on, Jenny?
Yeah, so ASMI, ASM International, which who is a semicap equipment provider, came out with a surprise positive profit warning this week, and that was basically down to a lower impact from the China restrictions. So, like all of the semi-cap equipment players, they came out at Q3 and sort of guided to lower Q4 sales because they were not going to be able to ship as many tools into China. And this week, they sort of came out and said that actually that impact was going to be lower. So a lot of those tools are still going to be able to go into China. And yeah, I think it speaks to what we've sort of said, that China are still ordering tools. They're still able to get tools. And, you know, I think there's a scenario where China, order a lot of tools and position themselves as a real kind of strategic solution to some of the supply issues that we're seeing in semis.
But isn't it a little bit surprising that the companies were so aggressively cutting? Although, if you read the statement from the US government, it was about 14 nanometers above, and that's where the Chinese companies are. So, for us, it was really hard to understand why they were cutting so massively. But I think it must have been that the language between the companies and the government were at a different level when they were talking offline, so to say, and then they were saw in the press release. So,
and I think there have been some clarifications from around some of those restrictions from the US government that I think, at the margin, you know, are slightly softer than the headlines suggested at the start of October. But it's also worth commenting how the FT reported this. So, you know, this was absolutely a positive profit warning, a profit upgrade. And the FT's headline for the day was Dutch chip toolmaker ASMI warns of escalating trade tensions. You know, in reality, it was completely the opposite, right?
Yeah, no, it's quite interesting when you decided on what story you want to bring out. So next week, I think the focus will be on the Foxconn numbers coming on the 5th. So see how the impact has been in China on the lockdowns and the trouble with COVID and the Apple effects. On top of that, we have quite an interesting event with Mr. Biden, Tim Cook, and TSMC delivering the first tool. They have an opening in their Arizona plant, the first US plant for TSMC.
Yeah, it'll be great. Very exciting.
Yeah, and it'll be interesting to see if we have any comments also on the second plant there. There are discussions regarding putting up a second plant also. So we'll see and hear if there's anything more coming out of that. So it'll be interesting week next week. A lot of Taiwanese numbers, while Foxconn being one of the key ones. And then you have the TSMC thing.
Perfect.
Thank you very much.
All right, thank you.